Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So today is going to be the second installment of our Guru Portfolios update. This is something that I'm going to start doing every quarter, as several of you have requested that we do, where we essentially go through the 13F filings for several of the investors that I personally follow over in the US, to see what they've been buying, see what they've been selling, and see if we can generate any good investment opportunities from that. So firstly, I'm going to go through all of the investors' portfolios that I went through in the last installment, which was Warren Buffett, Charlie Munger, Pabrai, Guy Spier, and Li Lu. I'm going to race through those, and then I've also got some new investors which I've just started to follow over the last quarter, so we'll have a look at them as well. So without further ado, let's get straight into it. So the simplest 13F to get through is the first one, which is Charlie Munger at the Daily Journal. It's simple because there has been absolutely no change. There has been no buys, no sells. Top positions are still Wells Fargo and Bank of America. Two minor holdings outside of that, and that's it. So there's your update for Charlie Munger. Pretty simple one this quarter, as it has been the last few quarters. He is very inactive in terms of buys and sells. He jumps on opportunities when they arise, but he makes big bets and takes those opportunities relatively infrequently. So no change in the Daily Journal Corporation for Charlie Munger. The second 13F we're going to look at is a guy that Charlie Munger has actually invested with, and that's very unusual for Charlie. He's only invested with one sort of fund manager in his life, and that is a guy by the name of Li Lu. And particularly this quarter, this is quite an exciting one. So with Li Lu, most of his investments in his fund are done in China. It's been that way for a few years now, and he hasn't actually had a holding in the US since September 2018. So when we looked at Li Lu's portfolio last quarter, we saw that it was basically empty. He only has to report holdings in the US, so we didn't actually see anything there. But gladly, we have got something this quarter, and we see that he made quite a major investment, north of $400 million into one stock. So he put that into a company called Micron Technologies, which, as you'll see, is a stock that is actually now quite commonly held amongst many of the investors we're about to talk about. So pretty interesting one from Li Lu there. I actually have zero idea at this point how much Li Lu is managing in his fund, how much money is in his fund. So as far as percentages of his portfolio that are in Micron, I really have no idea. If any of you out there have a way of finding that information out, let me know. Li Lu is an extremely successful investor. At the Daily Journal Corporation meeting, Charlie Munger said that Li Lu he thought was in the room, and Li Lu's probably, without doubt, the best investor in the room and has the best record. So for a long time, he was doing 30% a year. Once he moved predominantly to investing in China, I've seen very little updates since then. But by all accounts, and from what we've heard from Charlie just then, it sounds like he's still doing very, very well. So that's an interesting one from Li Lu, and like I say, it'll be in a couple of the later 13Fs as well as Micron Technology. I've made a video on why I don't own Micron sort of 6 or 8 months ago maybe. Possibly it's one for me to revisit. We'll have to see. So that is Li Lu. Let's get on to the next one. So I'm actually going to talk about two investors next, and those are Pabrai and Li Lu, two of my favorite investors, particularly Pabrai. So Pabrai, I've actually made sort of a separate video going into a lot of detail with Pabrai's 13F already, because it did involve a stock that several of you I know own, and I own personally, which is GrafTech. So I'm going to put a link somewhere on the screen here if you want to go out and check out the video on Pabrai's 13F. Not going to talk about it in too much detail in this video because I've made a much longer video with more detail there. But we will talk about Guy Spier's portfolio. So Guy Spier has a slightly different sort of approach to investing than Pabrai. So he is more of a, I would call Pabrai sort of an older school Warren Buffett. So more of a cigar butt type investor looking for deeply discounted businesses, not necessarily as concerned about business quality, still to an extent, but really looking for heavily discounted businesses and trying to buy them when they're very cheap compared to intrinsic value, get back to intrinsic value and sell them and kind of repeat the process. So Guy Spier certainly has an element of that, and he's cloned several of the investments that Pabrai himself has made. but he's much more of a buy and hold, higher quality business type person. So for that reason, you'll see a company like Ferrari in there, which Pabrai sold after it was spun off from Fiat Chrysler. Spier has continued to hold that for a long time. He owns other compounders like MasterCard, Berkshire Hathaway, and as a result, he's also very inactive in his portfolio. He doesn't make a lot of changes, and we've seen basically the same thing again this quarter. So no buys, no sells. He still holds Micron, which again is a relatively new position. But the top three stocks in his portfolio are still Ferrari, Berkshire Hathaway, and Fiat Chrysler, which he continues to hold as well. Okay, so the final guru of our sort of OG bunch of gurus in terms of the 13 Fs is none other than Warren Buffett. So we're looking at his Berkshire Hathaway 13F. As always with Berkshire Hathaway, you have to make a couple of considerations here. So not all of the money in here is managed by Buffett himself. He has two fund managers, which are sort of Ted and Todd in the office, who manage about $13 billion each, is my understanding at this point. So some of the investments, particularly the smaller ones, expect them to be Ted and Todd, and some even fall into Berkshire subsidiaries. So I know for a fact that there was an investment in an S&P 500 index fund in this 13F. Buffett, in an interview just in the last couple of days, mentioned that that was some sort of pension fund in one of the subsidiaries. So there's a few sort of odd things like that, but if there's anything where there's monstrous amounts of money, like anything probably in the top 10 positions with Berkshire Hathaway is pretty much guaranteed to be Buffett. He's the only one with the power to put that much money to work in a single stock. So in terms of updates, no major changes in sort of the top couple of positions. So Apple is still the largest investment for Berkshire Hathaway, and then Bank of America and Coca-Cola still come in at number 2 and 3. Probably the big thing that jumped out to a lot of people in this particular 13F is a change with a couple of the bank stocks. So we saw a relatively large change in the number of shares held in the company Wells Fargo, and that's a company that has been held by Berkshire Hathaway for several years now. So we saw the Wells Fargo holding reduced by 14% in terms of the number of shares owned. We have to realize that Berkshire has actually been slowly selling little chunks of Wells Fargo for several quarters for a long time now. Basically, that's due to share buyback. So Berkshire has to stay under a 10% total ownership of that Wells Fargo business to not fall into laws associated with becoming a bank holding company. So as Wells Fargo continues to repurchase shares and Berkshire's ownership sort of naturally rises as a result, they've been forced to sell small chunks to kind of keep their ownership percentage down under 10%. But in saying that, we've actually seen that the ownership has been reduced over and above that amount. So like I say, they reduced their shares in Wells Fargo by 14%, or about 55 million, and they now own only 7.3% of the company, where they were right up close to 10% before. So a similar thing happened with Goldman Sachs. So Goldman Sachs, they also sold several shares. They actually decreased their position by 34%. Like I say, it's a very large investment, so pretty much guaranteed to be Buffett. And in the interview that Buffett did the other day, he really didn't give away too much in terms of reasons for selling the bank stocks and where that money might be going or anything like that. He is very good at avoiding the questions around current portfolio positions and so on. So I'm no expert on bank stocks, and unfortunately I can't give you too much of an opinion on that either, but it will be one that will be interesting to follow over the next few quarters to see what continues to happen nonetheless. Couple of other changes. So there was a small increase in ownership in General Motors, which to my understanding is again a Buffett investment, and there was also a new position initiated in Kroger, which to my understanding is a Ted and Todd investment. So again, I can't really give you huge insights on that. I've made a video on the auto industry generally with that General Motors investment, so I didn't mention GM specifically in that video, but several of the same ideas apply, and I know that that is a stock that several sort of deep value investors have been invested in the past. I'm not personally a shareholder, but that is one that Buffett has been sort of slowly accumulating over a period of time. So those are our original investors in our sort of 13F group. I want to get into the new investors that I've been following. Several of these names are probably quite familiar to you all, but they have been added to my list to keep following a little bit more closely each quarter. Okay, so the first of our new investors is a guy that I made a video on a couple of months ago called David Abrams. So we're going to get into the 13F of David Abrams. His investment company is called Abrams Capital Management, if you're ever trying to find this 13F document. And this is only really the second quarter I've been following along with David Abrams' 13F. So I'm still sort of getting to know what a kind of usual portfolio activity, portfolio change kind of looks like quarter to quarter. The great thing with David Abrams is he runs a relatively concentrated portfolio, so he has some very high conviction ideas in there, and he's produced great returns over the past 15, 20 years really. He was formerly with Seth Klarman at Bellpost Group, so that's where he kind of got his start in the whole value investment world. So a couple of really good things there. One really bad thing in terms of me personally trying to clone some of these investments, and that is he has a lot of investments in the finance and in the medical / pharmaceutical kind of areas. So I'm not someone who understands pharmaceuticals particularly well. It's heavily regulated. It's completely different in the US to what we probably have to deal with here in New Zealand. So it's really something that's probably at the very best on the edge of my circle of competence. So it's probably not something I'm going to be looking at particularly closely. And although I understand the basic business model of a bank, I'm really no expert in banking or financial kind of corporations either. So a couple of downsides, couple of upsides to following David Abrams. But we did see some relatively big changes here. So he reduced the share count in a number of portfolio positions. I'm not going to get into any of them really in detail, because most of them were really only sort of 2 or 3% changes in share count. So nothing major. I suspect that's probably a move to across the board reduce position size slightly to get cash to add in to a couple of new investments, of which he has made a couple. So one of them shot all the way up. It's a brand new position this quarter, shot all the way up to being the 4th biggest investment. And again, unfortunately, that's in the finance space. So it's a company I've never heard of called Icahn PLC. Might be one worth doing some digging for me personally. Again, the finance and financial services industry is probably not my forte, but you never know. It's worth spending at least 5 or 10 minutes on to get a handle on whether I think it's worth pursuing further. So Icahn PLC was the first one. He also made a couple of other additions. So there were 3 other new positions in kind of his top holdings. So the first 2 are CWH and BMY/R, which again, I've never heard of in my life. So unfortunately, I again can't give you much detail on that. And the final company, which was a brand new addition, is one called ticker symbol OI, Owens IL Inc. Again, one I have never heard of in my life. In terms of the category of that company, they make wood and paper materials, apparently. So that could be one I could very well get into my circle of competence. So the great thing with these 13Fs is it gives you a whole lot of potential rocks to look under in terms of trying to find opportunities. So although I don't know a lot of these off the top of my head, certainly gives me a few to kind of dig into and see if I can find any sort of meat on the bone with those. Final 2 13Fs we're going to have a look at, which are also new ones that I'm following, are 13Fs that I actually picked up from reading this book and listening to the podcast from this author. So this is a book called The Acquirer's Multiple by Tobias Carlisle. He also runs the Acquirer's Multiple podcast, I'm pretty sure it's called, which you can find on YouTube and Apple Podcasts and all that kind of stuff. But basically, from following these guys, Toby on the podcast and reading the book, I picked up a couple of pretty useful names. So the first one is a guy by the name of Tom Gaynor, and he runs a corporation called Markel. And if you look at the stock price for Markel, it is pretty bloody impressive. So it's up about 14,000% since 1986. And looking through the sort of portfolio of Tom Gaynor, and learning more and more about his strategy in terms of investment. Basically, he is very much a modern Buffett style investor. So he is only investing in extremely high quality companies. The basically best in industry is the kind of business he's looking for. So you'll see the likes of Disney, you'll see Berkshire Hathaway itself, you'll see Brookfield Asset Management, which is another one of these sort of investment conglomerate type groups. You'll see several sort of high quality compounders in that 13F. So certainly one to pay attention to. It's a type of 13F, unlike the previous one we looked at with David Abrams. It's one where you're probably going to recognize a lot of the names. And the downside with investing in really high quality businesses is the price is often really high and sort of follows the level of quality. So if we ever see Tom Gaynor adding something to the portfolio, it's certainly something worth taking a look at, and it probably means that Tom Gaynor thinks it's at a more reasonable price at that point in time. So they're going to be businesses that you're often familiar with, so a really, really good sort of starting out type 13F, I guess. If you want businesses that you probably already are familiar with, and that a really good investor thinks are potentially undervalued at the time, it's going to be a great one to follow and look into. So in terms of the current portfolio and changes in the most recent 13F for Tom Gaynor and Markel, Berkshire Hathaway itself remains the largest position, and there were minor changes in that, but pretty unsubstantial really. CarMax, that is actually a stock, share count was unchanged. It's a stock that I believe Tom Gaynor's owned for close to a decade now, and he's captured sort of a 4 or 5x return on that investment. Brookfield Asset Management, which are actually the company that own GrafTech International, which any Pabrai fans out there will be familiar with. Disney, Marriott International, Alphabet, or Google, Amazon, Visa have all been added to in the last quarter. So all companies you're likely very, very familiar with. And no real major changes in any of those, but minor sort of additions to the existing holdings in all of those. So that's Tom Gaynor. Let's get into the final 13F I want to look at. And there's probably an action for some of you here to follow this guy even more closely. So again, it's one that I got from the Acquirer's Multiple book. So let's get into that. You've probably heard this name before. The investor is Carl Icahn. Okay, so if you're unfamiliar with Carl Icahn, he is someone that likes to raise hell in a boardroom. So he is one of the original sort of activist investors out there. He's someone that identifies companies where there could potentially be a lot of improvement with the management, buys essentially enough of a position in that company to have some sort of influence, and then goes ahead and tries to do what he can. So one of there's several companies he's done this with over literally decades now. He's had a phenomenal investment record as a result. And it includes some relatively big names. I mean, you can put even Apple in there, you know, the largest public company in the world outside of Saudi Aramco. He even was a relatively early investor in Apple at the time where they were building up just mountains of cash that they weren't doing much with. So Carl Icahn's whole idea was to buy some sort of position in Apple. Again, it's such a big company that he wasn't going to own 5 or 10% of it or anything like that, but buy enough of a stake to have some sort of way to at least get your thoughts heard by the management team, and have this company try to increase dividends and increase share buybacks and so on. And since that sort of activist kind of mentality took place with Apple, the returns have been quite substantial since then. So one of the things I want you to do, if you use Twitter actually, that's going to be an even better place to follow Carl Icahn than his 13F. So I can't say I'm a huge Twitter user personally, but I have got an account and I set up basically You can set up notifications so that anytime someone posts a tweet, you can get notified that they have done so. And I think if you do that for Carl Icahn, you will be much better off with your investments long term. So Carl Icahn loves to write letters to companies with several of his sort of suggestions for what they should be doing. And anytime he does so, he will post that on his Twitter. So you can read the letter that he puts to those companies. And like I said, I read about this in the Acquirer's Multiple book, and that was the example when he actually wrote to Apple at the time. So, and when he made it public that he had a large shareholding in Apple. So definitely one worth following. In terms of the positions, and there will probably be a lot of companies that you may not recognize here, and certainly ones to do some digging on. I'm going to give you my opinion on some that I do have some sort of insights on. The main one being Occidental Petroleum. So Carl Icahn, I got a notification on Twitter a few weeks ago that he'd written an open letter to Occidental, basically all about their acquisition that they did in the last year. So if you're unfamiliar with that, Occidental Petroleum is actually a company that Warren Buffett essentially lent some money in exchange for warrants to allow Occidental to acquire another business. And Carl Icahn basically wrote a letter to Occidental saying that that was a terrible deal for Occidental, great deal for Warren Buffett, and Occidental was just paying far too much money and, gave far too good a deal to Warren Buffett. So we actually saw the Occidental holding be reduced by about 14% in this quarter, which is really interesting. It kind of makes me think that perhaps Carl Icahn isn't going to do quite as well and have quite the influence on changes to management that he possibly thought he was going to have originally. So interesting one, not your traditional kind of value investor or high quality compounder investor that I tend to follow, but certainly an interesting one for these kind of special situations where management changes can have quite a big influence on long-term returns. So those are my new investors, and that's the 13F update for the quarter. If you've got any other investors I should be following, drop a comment down below and let me know who they are. I'm keen to hear your thoughts there. If you've got any opinions on any of these companies that you know something about and I don't, definitely drop them down in the comments below. I would love to hear from you. You can watch some older videos over there if you would like. You can subscribe over there if you haven't already. But that's all from me for today, and I will see you in the next one. Cheers.